What do you think is behind the impressive rally in the stock market? Well, the majority of finance professionals believe that the Fed is behind the current rally. That should not be a surprise to anyone, as the fire hose of liquidity has been poured on the economy. By my guess, there's been from about 8 to $12 trillion of Fed asset purchases, backstops, and guarantees. So, let's take a closer look. It seems that we've skipped from bubble to bubble, starting with Greenspan, then to Bernanke, Yellen, and now handed off to Powell. Investors have become well trained like Pavlov's dog to buy the dip and depend on the Fed when the market needs a boost. With all of this risk taking, how does one quantify or visualize just how big the Powell bubble is? You can probably pick any asset class to see what's happened, but an interesting perspective comes from Eddie Vanderwalt of Bloomberg, who wrote that raw material and equity prices have become severely disconnected, as this chart shows. As Vanderwalt notes, the NASDAQ is now trading at a multiple of about 152 times the Bloomberg Commodity Index. This surpasses the highs we saw during the dot-com bubble by almost a factor of two. The commodities, which are represented by the straight lower trend line, are a good representation of the overall economy. And the NASDAQ, which is near an all time record, is made of companies that do not consume a lot of commodities. As such, the measure is a good representation of the disconnect between the overall economy and the liquidity flood. Note that the average ratio since the end of 2001 has been about 37. And if that chart was not enough, the U.S. is now contemplating the next fiscal infusion. According to Bloomberg, the Trump administration is now considering as much as another $1 trillion in the next round of economic stimulus. That number seems kind of low, even though the U.S. fiscal deficit may hit $8 trillion in 2020. Maybe that's just my inner Pavlovian urge. But don't get too carried away, as the measure won't likely pass until late July. However, it's fairly safe to say that any fiscal prudence or conservatism is dead and buried a long time ago. The next $1 trillion will likely be followed by many more trillions of dollars, and this chart here will likely be a distant memory as the fire hose of liquidity has no off switch. So the result of the liquidity rush is that the Nasdaq 100 recently reached a new all-time record while the consensus earnings estimate for the next 12 months has fallen off the cliff. This chart here puts the fun into fundamentals. And with the explosion of the Fed balance sheet, it's not too difficult to see why the stock market continues to march higher step by step. Apparently, this is the greatest 51-day surge in stocks since June of 1933. And for today, that's ChewDog Charts. Thank you.